Is it possible there could be no end to inflation? Structural inflation drivers could keep prices high endlessly. Among the bigger structural inflation risks is the ongoing expansion of government spending. It seems like they just can't spend enough. Maybe this is fueled by an increased desire and a dependence on government. According to survey data, nearly 4 in 5 voters favored the stimulus payments triggered by the health crisis. These payments totaled nearly $1 trillion between 2020 and 2021. And right now, states are arranging for inflation relief payments to be dispersed as a way to help citizens negotiate high prices. Some years ago, noted Harvard economics professor Kenneth Rogoff wrote that, since the invention of money, pressure to finance government debt and deficits directly or indirectly has been the single most important driver of inflation. As excessive spending and government assistance become more of a permanent part of our economy, so too could the inflation that Rogoff and others say will follow it. There are other anticipated components of structural inflation, including the move away from globalization. The chief investment strategist at Bridgewater Associates recently acknowledged the likelihood of higher chronic inflation arising from reduced globalization. Today, we're in a world with tensions with China, the Russian invasion of Ukraine, the health crisis. All these things have led companies to say, I need to make sure my supply chains are resilient, not just low cost. That means bringing production home or to nearby countries. That's inflationary, and that is a change from what we had in the past. Sure enough, there are signs of the relocation of manufacturing back within our national borders. Analytics firm Dodge Construction Network says that construction of new manufacturing facilities inside the U.S. has jumped 116% in the past year. As companies make it a priority to bring production home, the disinflationary benefits of globalization will disappear. Another component of structural inflation rising is the green energy movement. There are different sources of the so-called greenflation, as it's called. One is diminished investment in fossil fuels. That's creating an imbalance between supply and demand of those energy sources. Another source of greenflation is the increased demand of commodities essential to green energy technologies, such as lithium, copper, and silver. According to the World Bank, the mining of green energy minerals need to increase by 500% between now and 2050 in order to meet anticipated demand. One member of the European Central Bank's executive board warns that the combination of insufficient production capacity of renewable energies in the short run, subdued investments in fossil fuels, and rising carbon prices means that we risk facing a possible protracted transition period during which the energy bill will be rising. The acutely high inflation that we're experiencing right now will likely end at some point, but we could be in store for a different and more insidious form of high inflation. I suggest you take this opportunity to learn more about what's going on in the economy by attending our one-on-one educational web conference at AugustaPreciousMetals.com/webconference.